Hi friends, in this series we'll talk about the Fibonacci series and I'll tell you how important Fibonacci series is. And as you can see, we have a chart open, and this chart is of Reliance script. And as you can see, I have lot many lines on the chart, and these are all exponential moving averages. And you may read about exponential moving averages, or maybe I'll create some of the videos on how we are driving the exponential moving averages and how we are going to use them. So in this section I'll talk about Fibonacci series and Fibonacci support and resistance, how you can utilize Fibonacci support and resistance to take trades and get benefited out of it. So example of this Reliance trade, here you can see there is a fall in the Reliance after results. So as you can see, it took a pause at 377 EMA, and 377 is a Fibonacci number. So those of you do not know about the Fibonacci number, let me tell you how Fibonacci number starts. Fibonacci number starts with 1, and it's a sum of two previous numbers. So 1, 2, and then the 3, because 3 is 2 plus 1 is 3, 3 plus 2 is 5, 5 plus 3 is 8, 8 plus 5 is 13, and so on. So it's a sum of two previous numbers, two previous Fibonacci numbers is a Fibonacci series. And as you can see, it took exactly the same support at 1150, and then it retraced back and reached close to 1180. Here you can also see, let me expand this. Here you will see definitely there are some areas where you are seeing such kind of a disruption, and this kind of a noise is to make and to hit the stop loss of investors. And always they touch it, and they sometimes retrace it back, or sometimes they close it, and the next day they'll make it above the Fibonacci number, just to ensure that some of the investors, those who have invested in, are getting out of it, because at this stage they'll definitely assume that it should touch ideally 200-day moving exponential moving average, but it didn't touch 200-day moving average, and it retraced back. As you're seeing, it retraced back. That's a time where you need to again take a trade here, because if you took a trade here, then as you can see, the price here is 1268, closing price is 1268, and the next day it closed at 1278 by giving a high of 1281. So it's a 10-point profit which you can earn. And as you can see here, it is getting close to your 50-day exponential moving average. So as soon as it is reaching near to close to 50-day moving average, you have a good time to close your trade. Do not wait. It should cross 50-day moving average, exponential moving average, or it should touch. Sometimes FIIs go above and beyond 50-day exponential moving averages. Sometimes they go lesser than that. So always take your trade 5 rupees low than your exponential moving averages. Okay, see, look at this here again. The chart again took exact support at 144, right? And then if you will see here, in the month of February itself, it retraced back to your 200-day exponential moving averages. And once it retraced back to 200 exponential moving averages, this is a very good stock to buy. See, try to understand why a stock is falling. First, tie that stock with your news. If that stock is falling because of a particular news, do not buy it till the time there would be some retracement. And if the stock is not falling because of news, it is just falling like that because it is overbought, then there is a very good chances that you need to buy the stock at exponential moving averages, because there's a very high probability that it will retrace back within 1 or 2 days, or maybe within couple of days. Okay, so let me open again another chart of Axis Bank, where you will see how it retraced back. So here's a chart of Axis Bank. As you know, recently the results came out, and though the profit was very good, but it didn't meet the expectation of the market, and it started fell down. So as you can see, it took support at 377 exponential moving average. It didn't move beyond that, and until or unless it is not breaking this support, there is always a trade. So whenever it is touching your 662, 666, oh sorry, 662, there is always a trade. Buy it, have a stop loss of 5 rupees, and then trade it. Definitely you will earn, or otherwise your stop loss will hit. So see, in the market, there is you will not always win in the market. There are chances, there are times when you will lose, there are times when you will win, but with the stop loss you can reduce your losses, you can limit your losses basically. And see, at this point of time, there's a high risk and reward ratio. At 5 point of risk, you are taking a gap of look at this, this price is coming where 658, close to 658, and this price coming here is 712. So see, look at the risk and reward ratio. What a risk you're carrying of 5 points, and you're getting a reward of 50 points, which is close to 1:10 ratio. I think it's not a bad trade. It's a very good trade that you can make. Okay, I'll post some more videos on the Fibonacci, and then I'll talk about some of the strategies which you can follow. I'll talk about 10 to 11 strategies in this every video, and do subscribe me and like my videos. Thank you. Have a great day. Bye.